So, Jennifer, I'm really delighted to introduce you, and really, we are very pleased to have you present. We know that you gave a Food Thinkers about 5 years ago, so we were just chatting about what has and hasn't changed in that time period. And Jennifer, for those that don't know you, Jennifer is a professor and is a Canada Research Chair in Global Food Security and Sustainability. As I mentioned, Jennifer's based at the University of Waterloo in Canada. She's a member of the International Panel of Experts on Sustainable Food Systems, and from 2019 to 2023, she served on the steering committee of the high-level panel of experts on the food security and nutrition, which you know is part of the UN Committee on the World Food Security. And she was vice chair of that body from 2021 to 2023, so a real wealth of knowledge. Jennifer has released a number of books, and her most recent book is Titans of Industrial Agriculture, and how a few giant corporations came to dominate the farm sector and why it matters. And this was released last year. So I'm sure many of our listeners online will have already had a listen, but we really look forward to your presentation today. So thanks, Jennifer. Over to you. We can't see your slides at the moment, so if you wanted to show them, that would be great.
Thanks, Christina. Okay. Just making sure you can see my slides.
Perfect. That's lovely.
Okay.
Great. Over to you. Thank you.
Thank you, Christina, for that nice introduction. And I'm delighted to be here today to talk about concentrated corporate power in the food system and why it matters. And as Christina mentioned, I last spoke in this series about 5 years ago, and it's really hard for me to believe that the time that's flown by. But as Christina said, the world has really changed in that period of time. But in terms of the talk I gave 5 years ago, it was actually at the beginning of writing my book, Titans of Industrial Agriculture, that Christina mentioned. And at that moment, I was really in the weeds of the deep history and trying to make sense of it. And I really am grateful for that opportunity 5 years ago to speak in this series because it really helped me to work out my ideas. They were quite in formation at the time. And so it's nice to be able to come back again. And thank you for that invitation so I can reflect on these bigger themes. So as mentioned, I'm going to speak about a couple of my recent ideas from a couple recent publications, and not just the book, Titans of Industrial Agriculture, which is focused on agricultural inputs, but also a recent paper published with colleagues in food policy about concentrated corporate power in food systems and how it affects people's agency. So this has been a big part of my research program for the last 5+ years. So really, why focus on corporate concentration and power in food systems? Well, I justify my focus because it's, concentration is a persistent pattern across food systems. And while it's long-standing, going back, more than a century, we really have seen heightened consolidation in recent decades, and it's important for us to make sense of it. Concentrated markets are also associated with inequities and uneven power dynamics that really matter for food system outcomes, including food security, food sovereignty, and sustainability. So in that sense, it's really vital for us to understand both the drivers and the implications of corporate concentration in food systems, especially because these outcomes matter for people's agency and ability to exercise their right to food, to decent livelihoods, and environmental quality in food systems. And so we need to understand those dynamics, especially when setting policy, because obviously policy should speak to, the drivers of the problems as well as their consequences. So that's why I want to focus on this topic, and just a brief outline of what I'm going to discuss. First, I'm just going to give a very brief overview of the arguments I developed in Titans of Industrial Agriculture, which, as I said, was more about the issue of corporate concentration in the agricultural inputs sector, machinery, seeds, pesticides, fertilizers. But then I want to talk about the application of the ideas from that book, Titans, to the wider food system. And so as I was finishing the book, I was also launching a project with colleagues to take those ideas that I developed and apply them to the wider food system, to try and understand, the dynamics of these kinds of power machinations in the wider food system. And then if time, I want to actually just share some brief initial thoughts on the implications of this particular geopolitical moment for the research and policy agenda on corporate power. Because in many ways, the geopolitical context is overshadowing some of the work that we're trying to do, and I want to show how it's interconnected to what we're doing, and important not to drop the thread of food systems in this moment. So first, to talk about Titans of Industrial Agriculture and my arguments that I developed in that book. And in my approach to the research, I just want to start out by saying I was really inspired by Louis Brandeis, who was a U.S. Supreme Court justice and a big advocate for antitrust, or what we call competition policy. In the rest of the world, in the U.S., they call it antitrust. And he was concerned about corporate size and also corporate concentration and its implications for society more broadly. And he famously had said, size, we are told, is not a crime, but size may, at least, become noxious by reason of the means through which it was attained or the uses to which it is put. So, in other words, he was worried about how the large size of firms, as they became big and dominant and concentrated in their sectors, and how that occurred through corporate consolidation, mergers and acquisitions, et cetera, and caused consequences that he saw deeply troubling, including other work that he wrote about the threat to democracy from the rise of corporate giants. And so in his work, he called on scholars and policymakers to understand how corporate consolidation emerged in the economy in the first place so that policies could more effectively address it. So he was writing in the early 20th century, but he called on scholars to investigate the rise of consolidation in the 19th and early 20th centuries. So I was inspired by reading this pamphlet of his, Other People's Money and How the Bankers Use It, which, it's a good read, and it feels like it could have been written yesterday, given the similarities in terms of corporate power and financial power in the world today, and then back in that moment in time. But what really struck me as interesting is, while there have been all kinds of studies on the rise of the railroads, the oil industry, and now these days big tech, et cetera, but there hadn't been deep historical inquiry into the rise of corporate consolidation and power in the agri-food sector, and in particular in agricultural inputs, which was one of the biggest industries in North America in the early 20th century. So I wanted to understand that, and that's really what inspired me to work on the book. And it was also partly a product of seeing these mergers unfold after 2015. And this was really what sparked me to begin work on the book. I've always been interested in these topics, but when these mergers started to happen, the 2015 merger of Dow and DuPont that created Corteva, which is the new sort of chemical seed offshoot of this merger. Then ChemChina announced it was going to acquire Syngenta in early 2016, and then there was this, lots of speculation about what would happen next. And then we saw Bayer acquire Monsanto, and that deal was announced, I believe it was late 2016, but wasn't completed till 2018. And then BASF, one of the other big chemical giants, stood ready to buy the bits of the firms that were merging. The regulators forced them to sell some parts to get the merger through, and then BASF acquired those firms and went from being just a chemical company to now being a pesticide and seed company. So what was once 6 dominant firms in the market, plus, if we consider the Chinese market, then 7, then it reduced to just 4 big firms. And what really intrigued me was that it didn't stop there. So in 2016, 2 of the world's biggest fertilizer companies, Agrium and Potash Corporation, which both were based in Canada, merged to form the new company, which we call Nutrien now, which is one of the biggest fertilizer companies in the world. And not on this slide because it was getting too busy, but in the farm machinery sector in this period, we also saw firms like John Deere and AGCO buying up smaller digital startup firms to get into digital agriculture and expand their markets. So a lot was going on in the last decade around consolidation in the sector, and I really wanted to understand it, but link it to the history as influenced by Louis Brandeis's call to understand this consolidation. So today we know that post-mergers, the top 4 firms in each of the 4 major input sectors, that being, seeds, pesticides, farm machinery, and fertilizer, control a significant part of the global market. So when we look globally, we see the top four seed companies control around 56% of the global market. The same top four firms control around 61% of global pesticide sales. We know that in farm machinery, the top four firms control around 43% of the market, and the top four fertilizer firms, it's 24%. But we also know that at the domestic level, this concentration can be much more pronounced, and especially for the fertilizer, like at the global level, because fertilizer is a unique sector with minerals and synthetic nitrogen, et cetera. It has a different kind of market structure. But at the domestic level, it's very, very concentrated. So as you can see here, and these markets being much more concentrated raises concerns because economists typically say when you have the top four firms in a sector controlling more than 40% of the market, it can distort markets in ways that can cause harm. Suboptimal outcomes can lead to higher prices, for example, or other kinds of effects that actually distort the market. And we can see here with these figures that in North America and in many other countries, the top four firms control around or over, in many cases, 80% of the seed market. When we look at soy, maize, and canola, top four firms control 100% of the North American potash fertilizer market. And here we know it for synthetic nitrogen, Mosaic and Nutrientus, two firms control 75% of North America's nitrogen fertilizer market. And in many developing countries, over 90% of the market is controlled by just a few companies. And these concentration levels, as I said, have become more pronounced in recent decades. And I really want to understand how we got here to this moment where we know that these markets are highly concentrated. There's the great potential for market distortion. How did we get here? Because what really intrigued me in starting to write the book was that these four inputs, seeds, pesticides, fertilizers, and farm machinery, they weren't even widespread market commodities. And we went, I mean, in the space of a couple hundred years to the super concentrated market. And I know this happens in other sectors too when there's new technology that comes around, but we've been farming for 10,000 years. Like what happened in that 200 years that went to, non-market commodities because seeds reproduce themselves, for example, to being controlled by just a few firms. So that was really what was driving me. And so what did I find? I mean, I just wanted to go over the three arguments that I developed in the book somewhat briefly, but just to say it took me over 5 years to research and write this book. And the three-part argument that I developed was first, how did these firms get so big in the first place? That was the Louis Brandeis question. And the firms that did rise to the top would have you believe it was simply because they were more innovative, they were more efficient, through hard work. But in reality, it was mostly mergers and acquisitions, and a host of factors were at play. And three in particular that I talk about in the book that drove this dominance. And I wanted to show this slide to show some of the firms that were very big and powerful, even as early as the late 19th and early 20th century. And the big firms that exist today almost invariably have ties back to some of these original firms. So I just wanted to point out that continuity of corporate power. And some of these companies you might not have heard of before, like Royster or Funk Brothers, but others you probably have, like Massey Harris or McCormick. But they're all connected to the companies that dominate in the market today. So in my historical work, which I don't have time to go into the weeds of that historical work today, and I did that in my last talk, but I'll say I identified three main drivers to this consolidation. And the first was what I call economic and financial dynamics. And we could just say, capitalism was a big part of this. But for me, that was maybe too aggregated of a term to describe what was happening. I wanted to pull out specific elements that help us understand this rise of bigness in the sector. And there are things like economies of scale, right? When a company gets bigger, it can be more efficient to a certain point by producing more and being bigger, or things like privileged access to finance, which was the case in much of the consolidation that happened across the sector, was access to financiers and big banks because of certain kinds of privilege and wealth that the CEOs of these companies had. There were also agricultural boom and bust cycles throughout history that encouraged investors to push these firms to acquire their rivals. I mean, the one example I love to mention is that in 1902, there was a massive merger of 7 farm machinery firms in the US. It gave the resulting firm, which was called International Harvester, it came from McCormick and a bunch of other firms. They had one company had 85% of the farm machinery market. And there's similar stories with the early fertilizer, pesticide, and seed companies. So the sort of economic factors were really important, but so was technological change, including, I would say, transformative innovations that happen both inside and outside of the agricultural sector over time. Often there's this lure of patent protection for new technologies, as well as the development of what I call technological lock-ins that are linking all of these inputs together. So seeds, pesticides, fertilizer, and machinery, in a sense, started to work together in a way that actually let the technology propel demand in the market and let those firms get bigger. And often they were trying to acquire each other because they were trying to move into each other's market space. So technological change is important, but the third factor I wanted to say is also the policy context. So many of the firms that grew big had direct government support in the form of subsidies or other kinds of direct handouts, government paying for technological research and development. I mean, this was a big issue with respect to hybrid seeds, nitrogen synthesis, and chemical pesticides. And we can also add in lax enforcement of competition policies, especially after the late 1970s, which allowed many mergers to take place. And that's why we can say there's been this huge um, acceleration of concentration after the 1980s because of that lax policy context. So it's a host of factors responsible. And over the years, we saw multiple waves of mergers and acquisitions that dramatically reshaped the markets for farm inputs from the mid 1800s to the current period. And also what were once, separate chemical and seed companies, they merged over the course of the 1980s and 90s into one industry that now sells both genetically modified seeds and the chemicals that are designed to work with them. And so we went from 4 separate industries for inputs or sets of industries down to 3. And it raises questions too about the future, because most recently, the agricultural input giants across all of these 3 industries are buying up now, as I mentioned already, startup firms, not just in digital farming, but also in biological gene editing kinds of startups. And so it's raising the prospect of further mergers could be down the road among the firms across these big sectors. So in short, concentration has occurred, due to these big drivers. And I would say we can't rule out, as I said, the prospect for further cross-sector mergers. But I know there's been this recent announcement that Corteva is splitting its pesticide and seed unit. Maybe we can come to that in the Q&A session. It's a really interesting story, what's going on there. But concentration has accelerated. And so the second key argument I outline in the book is that concentration lends different kinds of power to the dominant firms that sit at the top of the food system. So we have to understand how they got there. And then once they get there, they're able to shape that system in ways that keep them there. And so, okay, so I point out that these firms have the power to shape markets, what economists tend to call market power, which shapes the contours of supply and demand in ways that allow firms to acquire what economists consider to be excess profits, that is above and beyond the normal rate of return on investment. They also have the policy to shape policy and governance by lobbying policymakers and having other means to influence the policy context, which I'll talk about in a minute. And they have the power to shape technological trajectories, the power to decide and control which technologies are going to be promoted in the sector and then become dominant. And it's not a coincidence that these 3 kinds of power that I talk about in the book mirror very closely the very drivers that allowed firms to get big in the first place, because it becomes a self-reinforcing cycle. They gain power to shape the very factors that enable them to stay large and powerful. And I think it's important for us to recognize this, that these factors, in some ways, they some of these firms were at the right place at the right time. That when technological change was happening, they were able to benefit from changes in the economy, like the rise of the railways and the access to a national market, this kind of thing. Some firms really did just become winners, or they got picked as a winner by government policy. But once they got there, they were able to then use these levers of power to stay there. And that's why we have this continuity over time of some of the same companies. And we all know that power I would say it's important to recognize it, but power is tricky to measure. And power isn't necessarily always systematically exercised. And so there's a huge debate about whether this power actually exists. So what I tended to focus on was to say these kinds of power, they exist. They might be latent at times, but even when latent, it still matters for food systems. But we can identify examples of the strategies that corporations have pursued to exert these kinds of power. And that's what I outline in the book. And I just want to highlight a few of these. So, first, in terms of shaping markets, there are all kinds of ways in which the big firms shape markets to their advantage to reap excess profits. Just some examples I highlight in the book, the fact that John Deere was recently sued by the US government for dominating the repair market for tractors, not allowing other firms to repair their machines. They force farmers to sign end user license agreements they must only allow authorized dealers or repair shops to fix their machines. So this not only affects farmers' ability to make decisions about their own property, it also controls the market. It crowds out capacity for others to enter the market. Um, we also know that during the sort of period of inflation from the pandemic through the Russian invasion of Ukraine, fertilizer prices spiked in a huge way. And we know that the main firms saw massive profit increases. I put here the net profit increases, but it's not just the net profits that increased in this period, it was also their marginal profit rates. And that's a telltale sign that they're exercising market power when they can increase their profit ratio as well as their overall profits. And we also know that the pesticide companies, they've also been sued in the US by the Federal Trade Commission, as well as 10 states for paying loyalty payments to retailers who specifically promoted their products. And those retailers promised not to sell generic products. They only sold the name brand products. And that harmed farmers' ability to access generics, which are cheaper. And farmers ended up paying hundreds of millions of dollars extra for their pesticides. So these are all examples of how market power can benefit the bottom line of these firms. And there's tons of examples in the book, but I'm just highlighting a few here. They also shape technologies, and there's lots of ways that they've done that. But it's typically been through promoting their most profitable innovations, and those aren't necessarily the innovations that are best for society. And ultimately, they tend to drive lock-ins in the sector and reinforce industrial agriculture. So an example of this was developing genetically engineered seeds to work with specific herbicides. This was done when they knew that their patents for the herbicides were going to be expiring. And what they chose to do was to modify seeds that only worked with their brand of herbicide, and then force farmers to sign licenses that they would use it. And that dug in this kind of technology. Also, the use of digital technologies. It's being portrayed by the companies as being a more sustainable way to farm because it's more efficient, et cetera. But it's all designed around the fact that they want you to continue spraying herbicides and fertilizers and using farm machinery in a way that drives their own profits. And in fact, they're making giant profits from this rise of digital agriculture, and they're kind of pushing that technology. They're also pushing on gene editing that relies on the same concept as genetically engineered seeds, basically using gene editing to modify seeds that work with certain herbicides. Again, this is locking farmers in to the system through this kind of technology power. And then the companies also have an ability to shape policy and governance through a myriad of strategies. I know there's so much one could say here, but I just wanted to give a few examples where Bayer actually has put out a report on its lobbying, which is fascinating to see that it spent 50 million euro in 2023 alone on lobbying globally. And what's interesting is only some companies report this information. Some countries have legislation requiring disclosure, but it's not uniform. But we know that other strategies corporations have employed in the input sector is lobbying and the revolving door, um, public-private partnerships like with the FAO and CropLife, sponsoring scientific studies like Monsanto did with glyphosate, and shaping discourse through their public outreach. So in these ways, these firms have basically, as they became more concentrated, they've been able to exercise these kinds of power. As I said, this market power, technology power, and political power. And this has had impacts. And I try to trace this clearly in the book. It's had price effects through the market power. It's also created barriers to entry for new firms to enter the marketplace. It's focused on technology or profit focused innovations and the undue influence of corporations. And we need to connect that to those outcomes in food systems that we know are problematic, where we're seeing higher costs. So, for example, the higher cost of farm inputs, but also food, limited farmer choice and autonomy, fewer entrepreneurial opportunities in food systems. We're seeing tech lock-ins, the externalization of environmental costs and social costs. It also undermines democratic participation in food systems, and it reinforces societal inequalities. And so I know this feels a bit linear, but I wanted to make sense of connecting the dots because oftentimes we know there's corporate concentration. We know there are these problems in the food system. I wanted to show the mechanisms through which corporate concentration contributes to those problems. And also the broader costs that we need to consider. The higher costs in general threaten farmer livelihoods. They make food more expensive. So this is a huge problem in food systems. Farmers are losing autonomy. They're becoming de-skilled. They're losing the skills they once had around saving their own seeds, dealing with pests in a natural way. You know, the whole machinery has become something they can't even fix themselves. We're also seeing this, pursuit of profit-oriented innovations contributing to technological lock-ins that make it harder to transition to a more sustainable food system because it's difficult for farmers to get off that treadmill. And so that deepens the reliance on herbicide-centric models that threaten health and environment. So shifting now, I don't know how much time I have left. I'm probably talking for too long, but I want to briefly talk about the paper that we wrote where we took some of these ideas about the kinds of power that we can see in the input sector and how that plays out in the broader food system. And this is a paper that I worked on with several colleagues who are working on the Eat Lancet 2.0 report, and we were trying to understand how agency can be undermined by corporate concentration. And we applied some of these ideas of the different kind of power, but we did start by looking at, what is the concentration across different parts of the food system. And it was a bit frustrating because there's not one central database you can go to find this data. We scanned the literature, we looked at reports of international organizations, we tried to gather together what we could find regarding corporate concentration in different parts of the food system. And this is something I want to continue to work on because I think we need better documentation of what's going on here. But we can see that this ratio of the top four firms is often more than 40% at the global level. And we know when it's over 60%, that's highly concentrated. The likelihood of market distortions is much higher, over 60%. And we see this high degree of concentration in global markets. Again, not just the inputs that I was looking at in the book, but also, the meat sector, soft drinks, grain trade, bananas, cocoa, you could go on and on. And again, like with inputs, we found that at the national and subnational level, the regional level, there's high levels of concentration. So I mentioned already the seed market being very concentrated, but we can see grocery retail concentration is very high in many countries. Concentration of carbonated soft drink market at the local level, grain trading, beef processing, etc. So we know this problem exists more widely than just agricultural inputs. And our concern, as I said, we were trying to understand corporate power and its impacts through the lens of agency. But I want to say first, corporate power can undermine food security in all its dimensions. We know that HLPE, and other works have focused on the 6 dimensions of food security, and that's really gaining policy momentum. But we wanted to focus on agency because corporate power exacerbates inequalities very, very clearly. and can undermine people's ability to make choices that shape their own circumstances and food systems, and also shapes their ability to participate meaningfully in governance processes. And that's what agency is about, is that ability to make choices that shape your own circumstances and your capacity to exercise voice in decision making. And so agency is important not just for securing an adequate, appropriate, nutritious diet, but also has implications for livelihoods and the broader structure of food systems. So that's why we sort of focused on this lens, but I'm working on looking at this through a sustainability lens as well in my current work. So what did we find? We found that, building on this framework, that corporate dominance and power in the food system gives these firms the power to shape markets. And it's interesting because it's a little bit different from just the inputs, because we can see, of course, market power gives firms the ability to charge higher prices, but it also gives them, when we look at the whole food system, we see they use that power in different ways. They can use it to lower worker wages and also to lower the prices they pay to their suppliers. And farmers are in this unique position where they're caught between the input companies that are selling them inputs and the dominant companies to which they're selling their crops, and they're facing this price cost squeeze. And that's a dimension I think that needs more attention and research. But they also have this capacity to create barriers to entry. And we see this not just in the input sector, but across different parts of the food system. They also have that power to shape policy and governance, as I already mentioned, through both direct and indirect means, so through lobbying and revolving door and that kind of thing, but also indirectly through scientific sponsorship and other kinds of discursive engagement. And then they have that power to shape material conditions. So instead of just focusing on technology power like I did in the book, we kind of widen this out to look at the material conditions, like material consequences, the everyday shape of food systems is affected by corporate power and dominance. And so that includes things like shaping product formulation in food environments. It includes shaping working and production conditions, and it includes the shaping the technological trajectories, like I talked about in the book. And I realize I'm probably running out of time, but I'm just going to quickly go through some like rapid speed examples, because in the paper we go through lots of examples, but these are evolving and happening before our very eyes all the time. Like at the power to shape markets, the alleged potato cartel in North America, where four firms controlled 97% of the frozen potato market, leading to a 47% price increase over the space of 2 years. Lawsuits are ongoing about this particular case. We know there's been concern about grocery retail profiteering, especially in the 2020 to 2023 period, but it's ongoing. The the supermarkets, and there's research showing that supermarkets in many, many markets not only increase their sales in this period of high inflation, but they increase their profit margins. And so they've been galloping profits and accumulation of wealth. And then there's also been accusations of wage fixing in the meat processing sector. And this case was just settled a few weeks ago. And it's interesting. The companies were sharing data about the wages they were paying to their workers and keeping those wages low, but they settled a few weeks ago, but did not admit any wrongdoing. The power to shape material conditions. We know this through, this pushing by the big food companies of ultra processed diets and the health consequences that results in. There have been recent stories, this is just from like last week, of, this investigations into the use of restrictive property controls by grocery firms that put conditions on what leasers of their properties can and cannot do. And they often are saying you can't sell certain products or you can't sell them at certain prices. Or if they vacate a store after a merger, they can actually put a control on that space that says another grocery store can't come in. So that in that way, they can contribute to food environments and food deserts. And we have to remember too, these companies have been very instrumental in driving packaging decisions. Coke and Pepsi, for example, were huge in the development of the PET bottle that is now, this big discussion in the plastics treaty. But they're stepping back from their targets. And these are huge dominant players in the market, and their decisions really matter. And then the power to shape policy and governance. We know firms lobbying all the time. In the sugar industry, for example, there was this huge dust up in the US over whether some states were going to ban soda from SNAP benefits. sponsoring of scientific studies. We know that a couple weeks ago, the big study that played a huge role in regulatory decisions around glyphosate, the herbicide, was actually retracted because of Monsanto's uh, involvement in that case. And that study was used to make regulatory decisions. But we don't know whether the retraction of that paper will lead to different regulatory outcomes. And the big firms are also participating in governance forums to shape discourses. We know that, for example, at Belém, the climate COP, over 300 lobbyists and corporate reps were there. So, what are the policy lessons? I would say there's no one silver bullet to address these problems that are associated with corporate concentration and uneven power dynamics. We do, I would say, I think voluntary frameworks alone are not enough to rectify these problems because the incentives of the firms to exercise their power is just too strong. So, what we need are stronger competition policies. And by stronger, I mean they don't just need to focus on prices, which is what they have been doing. They need to look at wider contexts like technological innovation and lock-ins, wages and working conditions, food environments and health outcomes, and sustainability questions. We also need to reduce corporate political influence in food systems governance with stronger rules on conflicts of interest. We need to increase public support for alternative food system models that are not embedded in the kind of industrial food system and those technological lock-ins. There needs to be support for a binding treaty on transnational corporations and human rights. This is ongoing, but needs to have strong liability mechanisms. And I would say we also need to improve data availability and accessibility so that we can better understand this sector. Okay, I recognize I probably talked for too long, but I'm just going to briefly mention like what about this agenda and how can we deal with it in this current geopolitical moment? So as these what we're seeing is, in this new geopolitics of food is what I consider to be two triggers, military and political conflicts and economic and trade wars. And that's gaining a lot of attention in the media. That's part of this new geopolitics, but I would argue that it's being mediated through ongoing structures like market concentration that I've just been talking about and climate change. And when you see these geopolitical triggers mixing with market concentration and climate change, we see all kinds of impacts from this. Sorry, my slides are not animating properly, but we're seeing disrupted supply chains, higher food prices, climbing food import bills, elevated corporate profits, ecological costs, and hunger and inequality. These are consequences of this new geopolitics of food. But what I would say is that in this context where the geopolitical news is dominating the headlines every single day, we often are not seeing the kind of analysis I think we should see with respect to how it's playing out in food systems. So this is something I'm working on and really keen to understand more. But it's super interesting to me because what about this agenda on addressing corporate power? Has it just been abandoned in the context of new geopolitics? Well, it's a really complicated story, but one we need to dig into because although the US, for example, was and the European Union was inching towards more progressive competition policies before last year, actually when Trump comes to power, there's all this new geopolitics, much of it at his whim to impose trade wars or try to have territorial conquest. Um, we're asking these questions about antitrust when the rule of law itself is under threat. And I think that's something that we need to sort of come to grips with. But we are increasingly seeing analyses coming from the legal world saying that the application and implementation of competition policies is affected by this geopolitical turn. We're seeing in a sense, a relaxation of the rules in order that's, in an age of interstate competition where states want to use competition policy to actually compete with other states in a geopolitical context. And that could mean an unwinding of some of these more stringent competition policies we've seen in recent years. So it's an interesting moment. And I just wanted to raise this to sort of maybe engage in a bit of conversation about it. I don't have a complete analysis yet, but I think it was important to bring up that point. So with that, I'm going to stop and say thank you. I'm sorry, Christina, if I talk for too long, but I look forward to the questions. Thanks.
Thank you, Jennifer, so much. That was amazing. That was incredibly rich, and I don't think you could have had it any shorter because we would have missed too many important nuggets. So I think you could go on for another half an hour, and we'd all still be very, very interested. Such a breadth of work and research that's been done, and really brought new knowledge to food systems world and food policy. And I think it's excellent because I was just reflecting that so much of our work has been focused on farmers and consumers, and I know that there's a real recognition of that. But actually, this now starts to open that out and really understand and highlight very clearly where the power is and where further research gaps are, so we can build that evidence and make it clear to make the case for change. So I think it's excellent. It's really really crucial that leads to future research. And I guess one of my questions, which links to an anonymous attendee who has sort of suggested that what are the new research questions and what needs to be explored quantitatively and what needs to be explored qualitatively. And one of the things that struck me was about this sort of 40% market share is if you know it goes beyond that, then prices start to increase. It's not economies of scale anymore. And I mean, it's very interesting because much of this work reminds me of a book that I read in the early 2000s by an author, John Perkins, which he is called Confessions of an Economic Hitman. And it's basically about the energy industry. And really, it is domination in lower middle income countries and big corporations. And he came up with a phrase through that book called the corpocracy. So rather than an autocracy, you have a corpocracy. And I think it's an excellent term that is kind of very much demonstrated by where if corporations go beyond this 40%, then actually what does it mean? So I think then going to my question and part of your solution was about competition law. And is there something that we can do? And what research questions can we bring? What do we need to understand? What evidence do we need to really position and leverage competition law to bring about change in sort of these power structures and dynamics?
Great. Thank you, Christina. Yeah, these are great questions in terms of well, first in terms of this corpocracy. Thank you for that. I wrote that reference down. Um, but in terms of like what research questions, and in particular in competition law and policy, what evidence do we need? And I think these are great questions. And I'll just say a little bit about some thoughts in that direction. Um, because what's interesting to me is that within economics, there's this debate about whether market power is exercised. It's not necessarily a debate about whether market power is there. We know theoretically it's possible for it to be exercised. But in many economic studies, there tends to be this fixation on proving through numbers that it was actually exercised and actually caused harm. And I'll say, I mean, I did study economics as an undergraduate. I shifted gears after that into more policy studies. But I think only focusing on whether it was exercised and whether it caused harm, I think that's missing the point in many ways. And that's why we need a broader, more interdisciplinary approach to look at these kinds of issues. Because, and I mentioned in the talk and probably said it too quickly, but I think even when that power is latent, it's not that it doesn't mean anything. If there's a bully on the school in the schoolyard and you know they're a bully, you're going to act differently than if they're not there, right? And we see this right now with the U.S. foreign policy, where there's the possibility of that kind of action at any moment. And I would say that's still a concern in the food system when you have that kind of power. There's also a tendency from an economics perspective to say that in a way that's the discipline that we need because we need to do this through numbers. And you mentioned that, some of the questioner asked about qualitative and quantitative data. And again, I think there's too much of an emphasis on the numbers. And I tried in my own work to really emphasize that it's bigness that matters and the dominance that matters, not the precise concentration ratio. We know that generally over 40% problems start to be more likely to happen, and over 60% even more so. And so those are useful to see these big ranges, but like fixating on the really specifics, I'm not sure is particularly helpful, though I do love to see the data, I have to say. And also that quantitative data isn't always available to us. So that's a huge problem for those of us researching in this particular, research area, is that corporations will say this is like their own market share is their privileged information and not for everyone else. It could actually I've heard arguments, that it could contribute to further problems in the sector, because once you know the market share of all the other actors, then you might end up colluding in certain ways that could cause more harm. But at the same time, we know like the best way to understand the exercise of, I'm just focusing on market power here, is not just the profit of the firm or even their net profit, it's their profit margin on, their net profit on the margin. And getting that data is difficult. At best. And because it's only publicly traded firms that you're going to, first, you need access to a paid database to get that information. And then you need to have it be publicly traded companies. And, if they're private companies, they're not going to give you that information at all. So, and this is the case in the grain sector. We know most of the companies that dominate there are private companies. So we do need better access to data to uncover what's going on. And so coming back to the question, what do we need to do? My vision, or something I'd really like to do, is come up with a way to crowdsource a database where we can share information that we are able to access and put it on a map so we can see where concentration is and what it looks like in these different places. So, and then just to follow up quickly on the competition law question, again, like competition policy has tended to focus on market power almost exclusively. There's been a little bit of consideration for innovation in that policy, but I would say it could be broadened out to consider um, environmental, health, and other kinds of impacts, especially when we're talking about food systems. So to assume that price is the only thing that matters is only to focus on that access part of the dimensions of food security, and we need to widen it out to look at all those dimensions. So anyway, I'm nattering on. I will stop, but thank you.
No, I mean, I think that's excellent, and I think you've raised three really key points. I mean, I wonder whether the economics and the data do sort of modeling techniques like agent-based modeling help with that, where you can inform qualitative data to really look more broadly, not just at sort of economic modeling per se. So, are there some different sort of techniques that we might be able to explore to see this is how power could be represented? And you might use your three constructs, which are excellent, around policy and political and market share and technological advancements. Those three? Is there a potential for something like that maybe in some research?
Yeah, potentially. I mean, I'm not a modeler myself, but I think there are interesting things we can do with the kinds of qualitative and quantitative data that we do have. And we know that strategies are being exercised by firms to deepen these aspects of their power. Um, Proving that the strategy gives them power it's simply tricky. The one case that I found examples where I would say, okay, the World Bank has noted this, but a World Bank report did note that it was definitely lobbying that weakened policy initiatives for taxes on sugar sweetened beverages, for example. So even the World Bank is admitting, which tends to come from a more economistic perspective, said that lobbying had this direct effect. But I think we need more research that helps us tie those things together. And if there's a way that modeling can help us, combine these kinds of data to show these causal mechanisms, I think that would be great.
Yeah, that's excellent. Thank you. I have so many things I could talk to you about, but I better move on to the questions. One point I did want to raise around transparency of data is in the UK we're introducing mandatory reporting of sales, healthy food sales that retailers and manufacturers and wholesalers of a certain turnover have to start to report, and we're talking about what those metrics might look like. So that actually might start to set an international standard or a precedent that could be rolled out more broadly, because I think that transparency, one of the things that I wrote down is the public doesn't know this. How do we start to improve that transparency and make it, more aware that, the public become more aware of this sort of power dynamic? Yeah. Anyway, I'm going to move on. So, Andrea Zick has asked, that she realizes that much of your research is focused on agriculture and the power concentration in that sector. Do you know of any research that interrogates hospitality and catering concentrations? And linked to that, Andrea's also asked, just if you could very briefly explain for those of us that aren't economists, how this sort of increased concentration can end up leading to driving prices up rather than down, where that economies of scale sort of illustrates that. You touched on that second bit in your presentation, but sort of explaining that again, then we'll knock off two of Andrea's questions.
Sure. Yeah. First, on the first question on hospitality and catering, that's a super interesting question because I just got a research grant and I'm launching a project. It's a small project, but looking at the wholesale and distribution part of the supply chain in Canada. But I think this is something that needs investigation in every country, that what we actually see high levels of concentration in that part of the food system, but there's not that much written about it. Um, but hospitality and catering often fits in there because it's sort of these, companies that are supplying restaurants, that are supplying hospitals, prisons, whatever. They are super concentrated, but it's also then happening in that part of the food system where the food retail giants are vertically integrating into that. And so we now see these food retail giants competing with, the big food service people, but they're kind of serving different markets. Like the catering market is a little bit different from the consumer market. And we saw that in the pandemic when all kinds of institutions were shut down and all of the food that was packaged for the hospitality and catering sector went to waste because it was not easy to switch it over to the consumer market. So people were not finding the food they needed and then food was being dumped. It was a perfect storm of like a mess. But I agree there's more research needs to happen in that sector because we know, for example, I'm take hospitals because once I learned this about how new hospitals, at least in North America or in Canada, don't tend to have kitchens in them, and they used to cook their own food. Now the toast is toasted off-site and it's just warmed up in the hospital, and that just to me is like a little bit crazy. But that's part of this concentration story that I think needs more attention. So how does concentration lead to higher food prices? It's a great question because this is why it's so debated, is that some might say, well, when there's economies of scale, bigger size might make a more efficient per unit of production. It can actually drive down costs and then make prices cheaper. But as there's fewer participants in the marketplace, that can definitely happen, that it can push prices down. But then it pushes others out of the marketplace. So we know, for example, that Walmart and its huge size is able to put prices down, then it drives all the other retailers out of those particular markets, and then it can raise the prices because there's no competition. So it's really when it gets so concentrated that the corporations don't have any meaningful competition, forcing them to keep prices lower, they can definitely go up. And also they can collude with one another as they did, or allegedly did with respect to pushing down wages, or allegedly did with respect to pushing up prices. And there's tons of cases. Like there was a bread price fixing case in Canada where I think four of the five top grocery retailers were actually actively colluding for over a decade on bread prices. And this cost Canadians, hundreds of millions of dollars because bread is such an important staple in people's diets. And it was funny because somebody eventually uh, ratted out the others and there was a big investigation and then the corporations were forced to pay a fine and it ended up, giving people like a $25 gift card to make up for over a decade of elevated prices. Hardly compensation. But this is some of the mechanisms by which that works. It's generally weeding out the competition, and then there's nothing stopping them from raising prices.
Thank you. That's really helpful. What's also really interesting is the compensation and the fine. Is that significant enough to really prevent it happening again in the future? And that kind of deterrent is so important in food systems. And maybe it needs to be graduated up, based on new policies. But I think that is, yeah, such a good point. Anthony So has a question to say, thanks very much. What a great presentation. A question on profits that you mentioned in the context of fertilizer and pesticides. The question being, in your view, how much profit is too much or excessive and why? And can you give a specific percentage of what is an acceptable level of corporate profit or what is unacceptable level of corporate profit?
Yeah, that's a great question, and it's one that I want to understand more, so I'll say that first. But from what I've read from economists talking about this issue and this problem, is that, and first I'll say every sector has a different normal profit rate. So there isn't just like one, but often 10% is thrown around as a reasonable profit rate. And then what we saw in fertilizer was profit rates going up into the 20 and 30%. So that's, many would say, that is excessive. It's far beyond what would considered to be normal in that sector. But we know that in the grocery retail market, normal profits are usually quite low because they do this high volume, low margin kind of sales. And so their profit margins are closer to 1 and 2%. But then during the pandemic, when everything was like chaotic and groceries were raising prices, it might have gone up to 3%. And they will come in and say, that's still really low, but it's higher than it was, and their marginal rate increased. So that's the sort of, I would say it's a complicated answer because it's a complicated issue, but it's a little bit different in every sector. It kind of depends on the circumstance, but normally, I think most economists for most industry would say 10% is kind of a normal acceptable profit rate. But as I said, that can be high in some sectors, it can be low in others.
Thank you. I think that's a really interesting example from COVID because I often think about that and then how retailers or any businesses that may have profited from a particular circumstance, so be it geopolitical or contextual or climatic, who knows, but then they will refer back to, profits made previous last year and gains, and actually that it might look like a drop. And so they might be saying, well, we're really struggling, but actually relative to the last 5 years, it's still very healthy. And I think the way that we look at that and the way that we encourage businesses to transparently look at that, I think is really crucial. That trend over time, not just year on year change.
Yeah, I think that's
Yeah.
super important too. And if you look at the grain trade with the top companies controlling the grain market, sometimes they have losses and sometimes they have these massive gains. But if you look at it, smooth it out and look at it over time, you do see patterns of like massive increases. And usually that's when prices are rising because those companies are also engaging in, you know, spec speculative trades on grain where they make a bet based on their privileged information, and it usually pays off. Of course, they claim they're not doing this, but I've seen, transcripts of folks in that sector who kind of imply, yeah, they do that. I mean, of course they're playing the markets all the time, and they're even selling products to others, about that kind of question. So we do see these huge profit spikes, and then it could go down, and they'll claim, see, we're struggling. But they've accumulated a huge amount from those years when they win. So again, like I just wanted to stress, as you said, this longer term look is really, really important, especially in volatile industries.
Yeah, absolutely. That's a great example. Jenny Hanley says two questions. How does lobbying spend of the major inputs companies compare with advertising spend? And does food price increase at large retailers affect prices at smaller retailers?
Sorry, can you repeat the second question? I was writing the first one.
Does food price increases at a large retailer, so a large sort of supermarket, affect prices in smaller retailers that might be convenience stores or other sort of smaller, more specialist retailers?
Right. Yeah, those are great questions. On the first one, I should know the answer to that, but I don't. So I don't want to like pretend that I know, but I know in our paper, I didn't write that part. I didn't do the research on the part about the advertised spend, but it's in our paper, as is the lobby spend. So I can look I can look it up, but I'm not going to do that right now. But it's in the paper,
Perfect.
those pieces of data. Yes, and that paper is open access, I would say as well, so people can find it. Yeah, the food price question is a really interesting one, and I actually have a student investigating this next year for her thesis, where she wants to look at smaller independent stores and what kind of margin they, not just their profit margin, but margin to maneuver in a context where the market is dominated by just a few players. And I can speak to the Canadian context, and I'm guessing this is similar elsewhere. But as I mentioned earlier, the dominant grocery retail companies have um, vertically integrated into the wholesale distribution part of the food supply chain. And so what we often see is these smaller independent stores that we assume are smaller and independent, but they're actually relying on the same supply chain that's controlled by the grocery retail companies. And so they also typically have to have higher markups because, you know, they basically have smaller store spaces usually. They they might have higher rents because of where they're located. There's all kinds of factors that might mean they have to charge a higher price, but they are having to pay the same price, that's basically offered to them from the companies that own the big stores. And I haven't done the detailed look at the numbers yet, and so I don't know if they're charging those stores an unreasonable amount for their to get their supply. And it's a huge issue. And I know this from, various work over the last 20, 25 years, working with student groups, trying to set up alternative cafes at the university, for example, and trying to create our own distribution supply chain. It's a huge amount of work. At a former university where I used to work, we actually had to hire someone who's it's practically a full-time job for her to find the farmers that were going to provide the local food and then to drive around and collect it. Now, in my community now in Waterloo, there's an initiative that's trying to pool together in a regular basis to sell to many consumers through an alternative supply chain where you know who the farmer is. And it's sort of like they might have sold at the farmer's market, but they make an agreement to sell to this cooperative. So these kind of initiatives can happen, but they're an enormous amount of work to put together. So we can't expect every small independent corner store, et cetera, to be doing that kind of legwork for their supply chain. So they're typically relying on the big players. So I do think it does affect what they're able to do because of that concentration, but we're going to be looking more into that in our new study to find out exactly how that plays out.
I will follow up with you because we've been doing some work about supply chain mapping of the convenience store sector in the UK and finding very, very similar things. There's big consolidation, big supermarket retailers that are buying now and wholesaling directly to the smaller stores. What we've also found is that the fruit and veg supply chain is actually very different. It's much more heterogeneous and much messier. And that in itself, I think, is really interesting. So we're just writing that work up at the moment, but I will, certainly share some of that work with you. It'd be interesting to see cross-country comparisons.
Oh, for
Yeah,
sure.
that's
That'd
great.
be great. Yeah. We need more studies in different parts of the world to bring it together.
Yeah, yeah. So Shoba John says, what linkages do you find in terms of shared governance and supply chain dependencies or profit sharing arrangements between corporate actors in the agricultural farming sector and those in post-production marketing promotions of unhealthy food? So is there a direct linkage between the companies that are in sort of the big players in the agricultural sector and those that are big players in the sort of more consumer end of the food chain? And what policy interventions do you recommend to deter their disproportionate power or market distortions and regulatory capture of undermining public interest?
Wow, that's a huge question.
This is a big one.
Or a few questions. Yeah, I'm gonna shy away from answering because I'm not sure I have like specific examples of, I guess the question was, are the input companies kind of working with the big food outputs? I mean, through industry associations, of course, there might be instances where you see different kinds of firms working together and hiring a lobbyist to advance their interests. But I don't have an example off the top of my head of that happening. But
Yeah,
if
and I
if
guess it
others
could be
do, I'd be yeah. Sorry, go ahead.
no, I was just going to say it could be topic specific, but
Exactly.
yeah,
Like on sugar or whatever.
plastics
Um,
or yeah.
yeah, yeah, yeah. That's actually a good example is plastics because we see the big food companies and in this case the chemical companies working together, shaping narratives about circular economy and that kind of thing. Yeah.
Mm.
And what was the other part of the question, or was that the main?
Was more about what are the solutions? Do you know
Mm,
what really are? And you did list four, and we've talked a little bit about competition law. Would you do you
yeah.
fancy talking about any of the other alternative food systems models, better data? We've kind of touched a bit on that as well, and there was a fourth, which I didn't manage to write down. Sorry.
Well, just working internationally to hold corporations accountable through liability mechanisms and treaties and that sort of thing.
Yeah.
I mean, I think what's interesting to me, and I've developed a lot of these ideas before the big geopolitical shifts may have happened in the world. Um, and I had a lot more hope for cooperation and governance to address these problems in a rule of law kind of way. But I think every day chips away at my um, yeah, my hope that that will make a difference. So at this point, I think that's why I wanted to end the talk talking about the big geopolitics, because I think as food studies scholars, I'm sure every one of us is kind of wondering, wait, I've been working on this issue for 20, 30 years or 10 years or whatever stage of career you're at, but suddenly no, everyone's talking about Greenland. But every day the channel changes to a different geopolitical theme. And we're losing the thread about how to advocate for better food systems in this noise. And so, in a way, I think that's why we need to stress and highlight food systems as a really important response to the geopolitics. And we're seeing a number of governments trying to bolster their self-sufficiency right now or self-reliance, let's say. That's not like countries are completely abandoning the idea of trade, but they want to increase their domestic food production so that they're not so vulnerable in this particular uh, context. They're not so reliant on international trade when tariffs are going to be on and off and on and off. It's like super unpredictable, and that lack of stability is really hard. And so I think food systems and resilient food systems can be part of the solution to dealing with that particular noise. And helpfully, I think that building more resilient food systems, meaning more equitable, more sustainable, more um, resilient to shocks, is a really important way to address the corporate concentration piece because because that I would say the corporate concentration is delivering us more of an industrial model that's more vulnerable. And so if we have a more resilient system, it will be relying on a wider base of enterprises than just these 4 or 5 companies in these different parts of the food system. So I would see that kind of building of resilient food system as deepening or deepening connections, but dampening the power. So I think the response to geopolitics can also be partly the response to concentration. And I'm still working out these ideas, but I just wanted to
No,
share
no,
them.
I
I
think
think we
it's
need this
excellent.
conversation. Yeah.
Yeah, and I think it's really similar to things that discussions we're having in the UK about diversity, and what's government's role in that? What's policy's role in that? And it really struck me that Louis Brandeis, is that how you say it?
Brandeis.
And
Yeah.
his work was pre-World War One, pre-Depression, like paradigm shift kind of circumstances. And it feels similar. And so is our paradigm shift maybe not entirely moving away from capitalism, but maybe we agree that 40%, 30% of our food systems are not for profit or largely not for profit, are circular, but maybe they're not 100% that. Does that so we've got this sort of balance that's maybe slightly, and in each country it might look slightly different, but that more resilient, varied food system that's more local or regional and is not so profit driven actually grows in terms of resilience so that we know that we can feed a population should something really dramatic happen, but also it brings much greater diversity into our food systems, which can't be a bad thing. But then who pays for that? Who pays for that to be set up? I think that's interesting. And I think many of us, as you say, as food policy scholars would say, well, the public purse is fit to pay for that. But
Right.
I'd love your reflection.
Yeah, no, I think that's great. And it's really good to hear, those discussions. And I think address, like, there's also this conversation and discussion about public grocery stores, which I think you were kind of implying there. Um, but if we still have a concentrated middle of the supply chain, that's not necessarily going to work because where are they going to get the food from? From the big corporations, right? So we need to address these questions of concentration throughout food systems to make that kind of alternative model happen. So I think that's really important. We can't see those as two separate issues. They actually are the same issue. But that I think we yeah, I'm sorry. I'm just what you said is make my brain, all kinds of fireworks going off there. But um, we're we're in a moment where we're suddenly realizing, as states have long realized, that food and food security is vital for national well-being, and that in context of conflict, and this, conflict is it's rearing its head again and widening, and it's affecting food systems in really profound ways that affects people's well-being and food security, that it has to be part of the response to this geopolitical moment is building those resilient food systems. So relying on these like far-flung global supply chains that are the product of neoliberalism, I think, like Prime Minister Mark Carney in Canada made his speech at Davos last week, but he said it's a rupture. Those days are gone. And he even acknowledged the problems with neoliberalism, was like, wow. Um, so like we need to use the momentum of that moment to think about different kinds of supply chain arrangements, either with like-minded countries, as he proposed, middle powers, et cetera, but it also can be regionally, locally, all kinds of ways in which we can build these alternative supply chains. And as I said, it takes a lot of work. It's not easy. It's not going to happen overnight. But if we don't start moving in that direction, we're going to get stuck with these really vulnerable situations. Yeah.
Absolutely. That's why logistics is an entire very, slick industry on its own right, isn't it? Absolutely. I mean, I think the one thing that I think too is reduced productivity because of poor health is another, reason why capitalist systems are not working in high income countries anymore. And I think that's sort of in addition to climate change and market concentration, it's another rationale. Anyway, I'm going to end on one last question, and I'm really sorry. We have so many questions, so I'm sorry to our listeners that I haven't managed to make it through all of them. But I'm going to end on Lena Mahi's question, where she says, your work is so important, but in the current climate of questioning conflict-free research, evidence, and science, how can we do better in ensuring that our science is conflict free and is used for policy making? And yeah, we'd love to hear your ideas and suggestions on that.
First, just to say hi, Lena. Thank you for that question. Yeah, I think that's like essential because yeah, so much of research, and we see this in scientific research, especially around the agricultural inputs, is money supplied by corporate sponsors. And we also see that on the other end of supply chain in, studies on health and well-being and associated with processed foods and ultra-processed foods. And sponsorship in both of those places can really be, introduce biases into the research. So I think in terms of conflicts of interest, I think I know that journals right now have these policies, but people aren't always filling those forms out accurately. That was the problem with that Monsanto paper, for example. There was all kinds of meddling in there, and it wasn't disclosed. But I think having stronger public research councils, like I feel really fortunate to live in Canada, and we have a really strong public research council, and it's well funded, like not as well funded as it could be, but I've made a point in my career not to take money from anything else than the sort of peer-reviewed public purse in terms of research money, and we need more of that. I know it's challenging in some contexts, especially if people really want to do their work, and but I think it's vital. So like we need to support that, and then the studies that get relied on for policymaking should prioritize those that come from the public research funding as opposed to corporate sponsorship.
Here, here. I thoroughly agree, entirely agree and concur. And Jennifer, thank you so much. The